If you truly want to make money work for you, you need to start by making significant investments. Life is quite long, and at a certain age, we all aspire to achieve financial independence throughout our lives. So, I encourage you to consider investment as one of the primary methods to stop working for money and make it work for you instead. However, if you want to discover the safest way to do it, I recommend carefully following each of the concepts and strategies you will see in this video. You must know that when it comes to making an investment, it's advisable to start with an amount of money that, in case of losing it, won't drastically change your life. Therefore, start by staying until the end of this video to learn about ingenious ways to achieve financial independence. Let's move on to the first point. Loans between individuals. The first thing is to consider peer-to-peer lending or loans between individuals. Also known as P2P lending, or crowd lending, refers to loans between individuals without the involvement of traditional institutions like banks. In many cases, these are microloans or loans of small amounts. The loan amounts can range from $300 to $100,000. The objective of this type of financial transaction is to provide an opportunity for individuals or small businesses who cannot access bank loans to obtain financing through this method. It's important to note that the interest rates for these transactions are slightly higher because they involve higher risk for the lenders. So, how does it work? Well, it's quite simple. Individuals or companies with financing capacity or the involvement of external investors offer their services online or offline to provide financing to individuals in need of credit. These individuals or small businesses turn to these private lenders to obtain loans that traditional banks or financial institutions may not grant them due to reasons such as debt or irregular income. The only requirement for these peer-to-peer loans is that the borrower must have a property free of mortgage debts as collateral. In other words, the guarantee for the loan must be a debt-free property owned by the borrower. It's important to mention that there is also risk control in place. Some models require the borrower to provide additional guarantees to minimize the risk for the lender. This is known as secured person-to-person lending. However, most platforms do not require specific guarantees from borrowers but instead classify them based on their reliability and trustworthiness. In direct lending, the lender has the freedom to choose the borrower they want to lend money to based on their own criteria. With this type of strategy, you can initiate the project you desire, secure the capital to invest in a profit-generating venture, regardless of whether it's your own project or not. If you found this approach interesting and would like to learn more about peer-to-peer lending, feel free to leave a message in the comments. This will help me create a more in-depth video on this topic. Now, pay attention to the following point. E-commerce. Let's talk about starting an online business. You see, e-commerce is growing at an unprecedented rate, along with other online ventures like mentoring and more. In fact, e-commerce and the sale of digital products in Latin America have already witnessed a 23% growth a couple of years ago, according to some data from e-commerce news. So, what I'm trying to say is, why not seize this opportunity? Buying online nowadays is so easy that you can do it from the comfort of your own bed or kitchen, wherever you may be. Selling your products online is an excellent way to reach a larger audience, but of course, you need to create an online store or a website, a YouTube channel, or a social media platform with a substantial following to sell to a community. You need to take various actions to engage your customers, win them over, and close sales. An online store can open up new frontiers for your business, allowing you to sell to thousands of people in your country and around the world if you set your mind to it. This truly makes your money work for you. I recommend starting with small steps, perhaps by adding a few interesting products to your inventory, and then you can focus on expanding your product line and growing your business through digital marketing techniques such as email marketing and social media, among other things. The advantage of this type of online business is that once you've reached many people through your social networks and communication channels, you can generate income without being glued to a computer or an office all day long. However, remember that this investment requires a lot of effort in the beginning, and strategy is key. Your ultimate goal is to have customers and generate income. So, invest wisely and strategically. Investing in ETFs. Let's start by explaining what ETFs are. ETFs, or exchange-traded funds, are index funds that replicate the performance of specific indices. For example, the most popular reference index is the S&P 500, which includes the 500 largest companies in the world. Other examples are the IBEX 35 or the Dow Jones. When you invest in ETFs, you are not buying individual stocks but rather the value of the reference index as a whole. For instance, when you buy an S&P 500 ETF, denoted by the symbol S, you are investing in the 500 largest companies in the United States. This is advantageous because individual stock prices can fluctuate rapidly, making them volatile and high-risk investments. In the case of ETFs, you are investing in a group of stocks, which reduces volatility and lowers the overall risk. ETFs were introduced as investment instruments in 1976, initially designed to track the total performance of the S&P 500 index. However, their convenience and efficiency have allowed them to grow rapidly in recent years. The ETF sector reached $4 trillion in assets by the end of October 2019, and many analysts believe this is just the beginning of the era of ETFs. Now, you might be wondering how to actually invest in ETFs. Investing in ETFs is as simple as investing in individual stocks, and platforms like IQ Option, eToro, FolioNet make it increasingly easy and commission-free. After opening an investment account, you can use the search function to find and buy ETFs just like you would with stocks. In a matter of minutes, you could buy an ETF like LT, which tracks the performance of the Dow Jones, or QQQ stock, which mimics the behavior of the Nasdaq 100, the 100 largest companies on the Nasdaq Stock Exchange. These platforms allow you to buy ETFs from anywhere in the world without paying commissions. I encourage you to explore more about ETFs and consider investing in them. Additionally, there is a connection to cryptocurrency mining, but I will continue that in the next part of the response. Cryptocurrency mining. Cryptocurrency mining is a process known as proof of work, which involves validating and recording transactions on the blockchain. This process generates new coins as a reward. Some describe it as creating coins in exchange for earning them. Theoretically, it is a decentralized and manipulation-resistant process that operates without third-party involvement. However, cryptocurrency mining has become a highly professionalized industry that requires substantial investment. In my opinion, it is the least recommended option for generating profits with cryptocurrencies, as it can be challenging to find cryptocurrencies that can be mined profitably without significant investment in equipment. Nevertheless, if you have the resources to invest in mining, you essentially create money out of thin air. It's a clever way of generating income. If you're interested in a more detailed video on this topic, please write. Investing when markets are down. Dividends are among the key advantages of investing in the stock market as they offer the potential for higher returns. It has been proven that over time, the market tends to increase in value, despite the daily fluctuations of individual stock prices. However, during economic downturns, it is quite common to observe a significant decline, typically around 10%, in stock prices. Surprisingly, these market downturns do not tend to harm long-term investors who have established investment strategies. Now, pay close attention to these two extremely important strategies if you wish to start making your money work for you. Strategy number 1, invest when markets are down. This is something that 90% of people overlook. Statistics indicate that only 10% of investors in financial markets actually succeed. Therefore, buying during market downturns and selling during upswings may seem straightforward, but not everyone dares to invest when values are plummeting. There is a tendency to believe that prices will continue to decline. Similarly, few dare to sell during upswings, as there is a belief that values will continue to rise. Most investors buy during the euphoria of upswings and sell out of fear during downturns. That's why it's best to apply the second strategy: investing in innovative companies. You can invest in traditional businesses if you want, but the world is moving in a different direction than banks and insurance airlines, which are highly exposed to external factors like weather, and the world is advancing in another direction in terms of technology, so it's better to invest in sectors with future prospects, such as cloud cybersecurity or metaverse, renewable energy, e-commerce, etc. Real estate investment is also sought after today as many people look to invest their money in assets that offer a secure investment. Investment in real estate. It doesn't necessitate a significant time commitment, and one of the motivations for purchasing a property is to list it for sale or await its appreciation in value, enabling its resale, or the construction of new structures on the land. Likewise, selling it to another individual can be a feasible choice, ensuring a sufficient income stream for sustenance. Additionally, thanks to rental payments, you can benefit from the increasing property value over time. Therefore, it is more convenient than saving, as the interest rate on a savings account may not be very high and depends on the national economic situation. It is also less risky than investing in stocks or metals like gold or silver because the value of a property doesn't change dramatically but rather consistently increases over time. Local currencies may be worth less during times of crisis, however, properties are valued in dollars. You can take advantage of auction prices, which happens when the property is used as collateral for a bank loan since it is not fully covered. If the property is repossessed, the bank either recovers its investment, or the investment ends. Additionally, you can take advantage of pre-sale prices for new properties to make an immediate profit or sell once construction is complete. You don't need to be a real estate expert, but it's still recommended to consult a professional advisor to avoid problems due to lack of knowledge about certain legal and notarial aspects, among other factors that you may overlook. Furthermore, an advisor can help you maximize the profitability of your property and guide you on tax reduction from other sources of income, including rent. Cryptocurrency trading. In Bitcoin and cryptocurrency trading involves capitalizing on the movements that occur in various digital currencies. These price fluctuations can happen between a cryptocurrency in the US dollar, such as BTC, ETH, or LTC, or between different cryptocurrencies. The main differences compared to traditional investing are as follows. In trading, positions are held for shorter time periods. By trading, one can generate profits regardless of whether the price rises, long-term trading, or falls, short-term trading. Becoming a trader and grasping these concepts might not be easy initially, but you can learn by observing and studying the actions of other traders. Traders primarily focus on analyzing charts through technical analysis, but they often utilize other methods such as fundamental analysis, studying news, metrics, and other indicators to evaluate asset price behavior. To make money through cryptocurrency trading, it's important to develop a long-term positive expectancy strategy, manage risks, and control emotions, enabling consistent profitability. Trading Bitcoin or altcoins can be done through exchanges like Binance, or traditional brokers that offer various financial instruments for trading. If you liked the video and want to receive more exclusive content, subscribe to our channel now. Starting a channel from scratch is very difficult in the midst of many huge channels, but we are always looking to improve and deliver new videos. And if the video piqued your interest, be sure to share your thoughts in the comments below. We want to know what you think and how we can improve even more to surprise you. Your voice is valuable and makes all the difference to us. Thanks for watching until the end, and until the next video.